out. It's just a minute, just a minute. Just a minute, just a minute, just a minute, just a minute. Just a minute. Just a minute. Now, we then have these terms. So, now, every trading day, so we could look at price direction in a monthly islands, in a weekly islands, in a daily islands. What I mean is, you could look at market direction within a span of, let's say, daily. So throughout today, gold was in a bullish market structure. If you're looking at it on a daily perspective. So let's say this is Monday. On a Tuesday, price was in a bearish direction. Okay? On a Wednesday, price was in a bullish direction. On a Thursday, oh God, this place is all choked up. Now, market direction of any instrument could be looked at from either of these perspectives. So if you want to look at price on a daily perspective as an intraday trader, you could single out Monday, single out Tuesday, single out Wednesday, single out Friday, every day. If you are the type that looks at the market from a weekly perspective, regardless of what price is doing, let's say on a daily, price keeps making impulses to the upside. But on the weekly time frame, price is on a downtrend. So when I myself as a day trader keeps joining the ride to buy the instrument to the upside, you as a swing trader, you have your POI that you want price to approach to then correspond with the weekly bearish time market structure. So this is the weekly POI, for instance. So price has approached the weekly POI. You then look to short, to sell. So now you have joined. But myself as a day trader, singling out Monday, singling out Tuesday, I keep buying. But you tend to wait for price, not trading on Monday, Tuesday, waiting for price to come to that zone that would then align with the weekly market structure. But as a day trader, I tend to take trades on a daily, using a daily perspective, daily bias to trade. I hope I'm making sense here. So I've finished talking about accumulation, manipulation, distribution, telling you that normally during the Asian session, USD pairs, any pair you see paired with any instrument you see paired with the USD during Asian session. Why? Asia is not related to US. So definitely the market of US is closed. The New York session is closed. Any instrument associated with the US, normally they close. Unless, of course, if those USD pairs are paired up with Japanese, with Asian session pairs. That's the only reason why a USD paired, a USD currency, a USD instrument, a USD paired instrument would move during the Asian session. But when you trade something like GBP USD during the Asian session, GBP USD, during the Asian session, since this is a London-based as instrument and this is the US-based as instrument, definitely during the Asian session, London session is closed, New York session is closed. Therefore, they would tend to range. Since there's no volatility, the market is closed. Their market is closed, but the Asian session is open, and they have nothing to do with the Asian session. So they would consolidate. But when the London session is about to open, we would then have the proverbial manipulation, which is the second phase. The manipulation could be to the downside of the range or to the upside of the range. When we have the manipulation, we would then have the distribution either to the upside or to the downside, depending on the entire narrative you have, which of course, guys, calm down. With time, all of these things will make sense to you. I promise you that, God willing. Now, certain terms that I want you to have in mind is, just a minute. I told you all of these phases happen either on a daily, weekly, monthly. These phases. So if you look at the chart from a weekly perspective, you would find out that the price is, in fact, if you look at an instrument on a weekly perspective, you would find out that price of that instrument, in fact, on that weekly is accumulating, manipulating, and distributing on and on and on. If you look at it from a monthly, you would see it. If you look at it on a daily, you would see it. Now, this is a daily. Just look at this. Accumulation, manipulation, distribution, then close. Then we have open again. Accumulation, manipulation, distribution. And distribution could be to the upside, distribution could be to the downside. Depending on the narrative, depending on the bias you have, and depending on what price wants to do. Which of course, with your knowledge of market structure, price action, you would be able to most of the time speculate right. Because there are times you'd be wrong, but the point is to be right once in a while. With a good risk to reward, you'll be okay. So yeah, I hope guys. All right. Now, BOS, church, impulse, retracement, reversal, continuation, fake out, breakout, fake out. And then, of course, trending day, continuation day. As accumulation. Now, any given time at any day, price is either would open up and close doing either of these. Sorry. Accumulation, continuation, reversal, consolidation. At any given day throughout the sessions, at any day throughout given sessions, price would do either of these three. Now, when the market opens, if price opens and makes a bullish run during the London session, when the New York session comes, it could either continue with, now let's say this is the London session. Let's say this is the Asian session. Then we have a manipulation, and we have a distribution. Now this is the London session. This is the Asian session. Now, when New York session opens, price will either reverse or continue moving to the upside. So if it continues moving to the upside, we then tend to say we had a continuation day. Because during the London session, price was bullish. During the New York session, price continued being bullish. So that day, we had a continuation day. Perfect. Now, the next one is the reversal day. It could be during the London session, we had a bullish run. But during the New York session, price approaches a higher time frame POI that would then reverse price. So during the New York session, we would have a complete reversal. So this is a reversal day. Perfect. The third one is a consolidation day. Now, how the consolidation day works is during the Asian session, during the London session, we had a manipulation to then break out of the Asian session range. Instead of having a bullish or a bearish run, price then tends to range. So during the London session, it would range, and during the New York session, it would range up to its close. Then maybe the next day after the Asian session, we then have a manipulation during the London session, then boom, a distribution during the London session and the New York session again. So this is Asia, and you put A. This is London. Just a minute. So this is London. And this is New York. So let me write New York, NY. This is London. Let me write LO. And this is Asia. Let me write AS. And this is New York. This is London. This is Asia. Yes. So this is Monday. But this here, this is Tuesday. So on a Monday, we had a consolidation day, but on a Tuesday, we had a bullish run. We had a continuation day. Because what? The London session was a bullish session, had a bullish price action, and New York session also continued the bullish run. And then market closed. So I'm sure it's slowly making sense. I'm sure it's slowly making sense. Let me go to the chart and show you. Now, this here, in the Asian session, we had a consolidation, which is normal because the market is closed. The market is closed, and the USD pairs, London pairs, don't move during Asian session, unless of course they are paired with Asian session instruments. So when London session opens, we then tend to have a manipulation into a high time frame POI, and then boom, we had a bullish run during the London session. And when New York opened, we had a slight reversal to then retest the Asian session. And we will talk about some other time. But we had a slight reversal, and then the market closed. So this day, we can say this day is a, should we call it a reversal day? Let's call it a reversal day. Let's call it a reversal day. So yeah, makes perfect sense. Makes perfect sense. So you have to be able to differentiate sessions as well as instruments. So you need to know the behavior of your instrument respective of each session. You need to know when do your setups form. I'll teach you how to identify setups. We are yet to reach there, but I'm just giving you insights. At least I'm sure today you have a better understanding of how price moves. Now, price doesn't just accumulate and just anyhow. No, there's a science behind it. I told you the reason why price ranges during the Asian session, especially USD pairs or London session pairs and New York session pairs, is the market of London session and New York session is closed. So therefore, there's little money. There's no money to move market either upwards or downwards and help it have a clear direction. So it's going to range. And during this time is what we call the central banks dealers range. The central banks, they tend to make transactions between themselves during this time. So your country, if you normally trade transactions happen. If Nigeria wants to buy anything from China, that's when they normally do their thing. When the market is closed and they tend to do their thing. Or when a country, let's just leave it at that. Of course, there's something we call liquidity. There's something we call liquidity and manipulation distribution. What time frame? So every time frame, you will see it on every time frame. Every time frame you go. Don't worry, we'll go to the chart. Which depending on the type of trader you are. That's why I said either on a daily perspective, look at it here. Either on a daily perspective, weekly perspective, or monthly perspective. So you need to know what you're looking for. You need to know what you're looking for. It could be on a monthly time frame, price is bearish. On a weekly time frame, price is bullish. On a daily time frame, price is ranging. So you need to know what you are looking at. You need to know if you are looking at the monthly, that means you want to take a trade based on monthly price action. So you, since price is bearish on a monthly, you would have to wait for price to come to a monthly POI that would then take price even lower. If you are a weekly trader, you need to make sure price comes down to a weekly POI to then push price upwards. If you are a daily trader, you need to make sure that price gets out of this range that it's doing, give you a clear direction on a daily perspective, and then take your trade. So the same instrument but different time frames. So when someone is looking for buys, you are looking for sells. When someone is looking to enter, you are looking to exit. That's the beauty of this thing. Someone would be trying to buy, but you're trying to sell. None of you is wrong. Either of you, neither of you is wrong. Neither of you is wrong. So that's why everyone has to develop an independent mind, know what you're doing, and then believe in yourself. Do your thing. Don't let anybody tell you you're wrong or right. Or I really hate interfering with your choice of strategy, choice of time frame, choice of no. You never hear me do that. I just tell you, just believe in yourself, do it yourself, figure out for yourself. Because that's how you develop a mindset of your own, an independent mind. You really can't afford to get to be spoon fed every single thing. If it's confusing what we're doing now, it's normal. I told you about the normal initial irritation. You are immersing yourself in a new realm, and this isn't an ordinary industry. This is an industry where the smartest people in the world play. So it's not supposed to be easy and just a walk in the park. It's definitely going to seem absurd and really, really difficult. So yeah. Putting together these concepts, BOS, church, impulse, retracement. Now, what BOS is if the market is trending upwards, whenever we break the previous high in an uptrend, we see we have a BOS, break of structure. If a market is in a downtrend, whenever we break a previous low, we see we had a BOS. So this is a BOS. Okay? Whenever we break this, we don't break this place. So BOS, break of structure. BOS. BOS. So this is BOS. Now what church is To understand church, you need to understand BOS, church, you need to understand retracement, continuation, and reversal. Whenever we have a BOS, what we're having is we're having a retracement and a continuation. The retracement is the correction, the continuation is the impulse. I'll repeat. The retracement is the correction, and the impulse is the continuation. So this is boom, impulse, correction, boom, impulse, break of structure, correction or retracement, impulse or continuation, correction or retracement, impulse or continuation, correction or retracement, impulse or continuation. Between them is BOS, 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 BOS. So this structural low, structural high, structural low, structural high, structural low, structural high, structural low, structural high. Now these are really important, especially when you are looking at the higher time frame. Because on the lower time frame, between this impulse, you might be seeing so much noise. BOS structure, US structure, US structure, US structure. So this on a high time frame is just a single leg, an impulse, just clear one. But on a lower time frame, you'll be seeing so much noise. So you need to have a narrative of the high time frame order flow and identify your structural points on the high time frame, so that whatever you see in between, when you go to lower time frame, you know that it's just noise. So what I've just explained now is the concept of retracement or correction and impulse or continuation. So this is impulse or continuation, this is retracement or correction, and this is BOS. Boom. Guys, I hope it's clear. I'll move to the next one. Now, where church and reversal comes in is this here is a structural low. So when this low gets broken, we now have a church, change of character, because this is now broken to then signal what? A reversal. So we now have this initially is intended to be a correction, then impulse, but it failed. It broke this structural low that we expect to get protected, but it got broken. So the fact that it got broken, a BOS in the opposite direction is a church. So if it had broken to the upside, if it had made a correction, then broken to the upside, we'll say this is BOS. So the correction, impulse. But no, what it did was instead of making a correction, it broke this structural low. So instead of us to have a correction and an impulse, what we now have is an impulse that broke this structural low. So this is a change of character. We then have a correction, we then have an impulse, BOS, correction, impulse. So here, we will have a church. So here, we now have a church. But here is a BOS. So a BOS in the opposite direction of a high time frame trend is a church. But BOS complementing in the direction of the high time frame trend is a BOS. Am I making sense? So here, this is a BOS. This is a BOS. Here. Okay? But here, this is a church. Because this low couldn't get protected, it got broken. So we have a change of character. That's what a church is. Signaling reversal. So whenever you have a church, what it is signaling is a reversal. Why? Because initially the trend was bullish, but now we have a reversal, a reversed. So instead of bullish trend, we're now having a bearish trend. So this is how a reversal comes to play. And then going forward, we would be having BOS to the downside. So this is BOS. This is BOS. Sorry, this is BOS. This is BOS. I'll draw the line now. I'll draw the line. Now look at it. BOS, 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 BOS. See how simple it is. You see? BOS. Now, the first one was impulse and retracement. This is impulse, retracement, impulse, retracement, impulse, retracement, impulse, retracement. And then all of a sudden, we had, instead of a retracement, we had an impulse because it broke this previous low. So we then had a correction and we had an impulse. And then the BOS phase to the downside started. But the first BOS that changed the trend from bullish to bearish is church, or change of market structure, or change of character, or break in market structure. Some call it BMS. Some call it SMS, shift in market structure. That's why I said language is a big problem in this industry. So you have to be very careful. So yeah, some call it church, some call it BMS. So this is it. Some call it church, some call it BMS. So we now have a different phase again. So from bullish trend, we now have a bearish trend. And where this normally happens, reversal, is when price comes to a higher time frame PY. Because you could see a church on a lower time frame, but as I told you, within this structural leg, in this structural leg, when you come to a higher time frame, you keep seeing nonsense. And you think that you see a church, you think it's a church. You don't know that they're just deceiving you. When you think it will continue going downwards, it would then go up. You're like, but Hamza said church, and I'm seeing church. No, bro, that's not how it works. You have to have the high time frame perspective at the back of your mind. You need to make sure that the church you are seeing broke higher time frame structural point. Okay? Or you need to make sure the church you see happened at a higher time frame PY. PY could be an order block, support and resistance, and VG. We'll get to that part. But just understand basic market structure here. This thing is enough to save you so much. Oh gosh. All right. Now, which brings me to the concept of complex pullback. These are all, just a minute. Complex pullback. Please write this down. Complex pullback. Adi, I know you're writing. You're jotting down everything, so trust you. Now, so where the bullet point I added is the complex pullback. Complex pullback. What it means is the example I gave earlier. I told you whenever we have an impulse correction, impulse correction, impulse correction, and then all of a sudden we had a correction that broke previous structure, that's a church. Okay, that's a church. Now, when you go to lower time frame, you would see these kinds of things, and they're just false signals. Because whenever a church happens, we expect a reversal. But the complex pullback is a false signal, is a false church that gives us a false idea that a reversal is imminent, when in fact it's a lie. So this is how a complex pullback works. This is the high time frame structure point. This is the high time frame structure point. But a complex pullback will make an internal structure by itself, and it will break that structure. And then you would think it's a church when in fact the high time frame structural points are intact. And then it would deceive you into thinking we'll have a reversal when in fact it's just a deception. It will continue going upwards. I'll take it back again. This is impulse correction, impulse correction, impulse correction, complex pullback, complex pullback, complex pullback, and impulse. So complex pullback is supposed to deceive you by making you think this is what is happening, church, when in fact it's only making its own internal structure and breaking the internal structure without touching the structural higher time frame structural points. Once it gets to higher time frame structural point, it will just go back up and continue. So it has deceived you into thinking a reversal would happen and you would sell, when in fact price would just go up and take you out. So once we go to the charts, you will see these things, but just have them at the back of your mind. That's my intention. So where we have breakout is, now let's assume price here kept going up and it came to this higher time frame POI, this higher time frame POI. We expect the POI to hold price and push price downwards, and vice versa. If price is going down and it comes to a high time frame POI, we expect the POI to hold price and push price upwards. So there are times that the POI will fail and price would break through that POI. So we call it breakout. Okay? And there are times that price would make a fake out around the POI. It would give us an impression that the POI wants to fail, but in fact, it's just a lie. And the POI will hold again, and then boom, it will continue. So breakout and fake out. Breakout is when the POI is successfully broken, when the POI fails to hold price and price pierces through it. And fake out is when a price gives us a false impression that it wants to break out, but it's just a fake out to then respect the zone and continue. So these POIs could be a repeat order block, supply and demand, support and resistance, fair value gaps, previous daily highs and lows, previous monthly highs and lows, So yeah, guys, we have covered so much today. I would very quickly do a quick recap. Market structure, price action. Market structure is either trending or ranging. Trending could be upwards or downwards, uptrend, downtrend, bullish trend, bearish trend. Ranging is when price is making equal highs and equal lows, neither going up nor down. And normally, that is a danger zone. A choppy zone is a danger zone. Stay away. Make sure price gives you a clear direction of either trending upwards or downwards before you find a way to join the trend. There's a saying, the trend is your friend until it ends. So always find a way to join the trend. It gives you lesser risk and more returns. So yeah, of course, time frames and order flow. When you understand time frames and you understand order flow, meaning the order flow is bullish on a higher time frame, and you understand how the fractal nature of price, You understand that this is a high time frame structural high, high time frame structural low. You understand that anything you see in between is just noise. Unless the structural highs and lows of the high time frame get broken, then the high time frame order flow is still intact. If the high time frame order flow is bullish, we are still bullish. Unless the high time frame structural points fail, that's when you will change your narrative. Fractal nature of prices. You go into lower time frames to find an entry because the concept of refinement, I'm yet to speak about refinement. When I get to POIs, I will talk about refinement. But just have it at the back of your mind. Fractal nature of price is just like the Russian doll example I keep citing to you guys. What's happened at the high time frame is just what's happened at the lower time frame is just an attempt to join what is happening at the higher time frame. What your baby is doing is simply an attempt for it to grow and become an adult just like you. Okay, whatever you see your baby doing or your junior brother doing, he's just trying to see to it that he becomes just like you, an adult. So whatever you see the lower time frame doing, it's just trying to meet up with the higher time frame. So it's all the same thing. The only question is how can you synergize, how can you put together these time frames and take advantage of them? That's really it. So very quickly again, we have the high time frame, we have the lower time frame. Depending on the type of trader you are, if you are a swing trader, you would want to focus on the week, monthly, weekly, and daily. If you are an intraday trader, you would want to start from the daily, 4 hour, 1 hour, yeah, up to the lower time frame. But in my opinion, have an idea of what every time frame is saying on the instrument you are trading. So yeah, a high time frame consists of the monthly, weekly, daily, 4 hour. It's the same thing. If you go to the high monthly time frame, each candle that you see represents 1 month. If you go to the weekly time frame, each candle that you see represents 1 week. So if this is a monthly time frame, if you break it down to a daily time frame, it would be 30 days. So you would have 30-day candles. You have 30 candles. Okay. If you come to weekly, instead of 30-day candles, you would have 4 candles. So this monthly candle that was initially 1 on the monthly time frame, if you come to weekly time frame, you will see it as 4 candles. First week, second week, third week, fourth week, and then boom, February is over. If you come to daily, you would see 30 candles for the month of February. If you come to 4 hour, same. You will see 4 hour candles that would then amount to 30 days, 1 month. If you come to 1 hour, you see 1 hour candles that boom, 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 that would then amount to 30-day candles. So same applies. It's the same thing. It's the same thing. And you need to understand that every candle has an open, high, low, and close. So being able to, and when price opens, the price action is normally choppy. High is when price makes a pull to the upside, maybe during the kill zone, and then low is when price is about to close, it makes a low, and then it will zuki up and then close. Don't worry, guys. This is just. I know this sounds a bit complicated, but trust me, we still have um, about how many days? Let me look at the calendar. We still have about 15 days now. We have 13. We're at the 13th month of March. So by the end of this month, the bootcamp will end. So I'm sure you guys should brace up, honestly. Should brace up. So yeah, I just speak to you about accumulation, manipulation, distribution. I did tell you at every time frame, you would see these pairs, these instruments moving in this behavior. The same way as a human being, you rest, you eat, you work, you rest, you eat, you work. Same way applies. These pairs, they rest, they eat, they walk. They rest, they eat, they walk. They rest, they eat, they walk. Okay, it's the same thing. It's the phase. So the resting is of course in an accumulation phase. The eating is in manipulation phase, and the working is in the distribution phase. So the distribution could be to the upside, to the downside, or in a ranging fashion because it could be a continuation day whereby the London session would be bullish, the New York session would continue being bullish. It could be a reversal day. The London session would be bullish and the New York session would be bearish. So the London session, we had a push to the upside. The New York session reversed the move. So that's a reversal day. And a continuation day is in a situation whereby the London session had a move to the upside. The New York session continued that move. That's a continuation day. And a consolidation day is when the London session fails to give us a clear direction, and the New York session also fails to give us a clear direction. So that's a consolidation day. Consolidation day. So you see, guys, it's slowly making sense. It's slowly making sense. It's slowly making sense. So yeah, I did speak about the concept of break of structure. Boom, boom. Impulse, correction, impulse, break of structure. 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 And we have, instead of a correction, we had an impulse that then broke the previous low. Boom, change of character or break in market structure. We then have a reversal. Okay, we have a reversal. So this here is a continuation phase. This here is a reversal phase. So yeah, I did speak to you about correction, retracement. Let's look at this. Look at the way I spelled correction. None of you corrected me. Kai. Correction isn't spelled correct. Which kind of life? Correction. I think this is the correct spelling. So yeah, I spoke to you about complex pullback. This is very, very crucial. I repeat, high time frame impulse, high time frame correction, high time frame impulse. Lower time frame, you will keep seeing this. So you will see a church on a lower time frame. You would think that the trend is about to reverse when in fact it's just a complex pullback, because this is protected and this is protected. Unless this gets broken, this is just a complex pullback. So we have boom, continuation. Don't worry. Once we go to the charts, you see it. So yeah, I spoke to you about breakout. Let's say this is a high time frame POI and price is coming to it. So we expect the POI to hold price and push price upwards. Okay, but the POI fails. Boom, it fails. So this is a breakout, which normally we will have a retest of the breakout, then continuation. So it's time. Give to receive. My alarm just went on to tell me that it's time. So yeah, we have a fake out. And what fake out is let's assume price comes to this POI and boom, the POI it just failed. But as it turned out, the POI didn't fail. And we have boom, correction. So this is a fake out. Fake out. Therefore, fake out. So yeah, guys, to this. And of course, I spoke to you about price action, inefficient and efficient. When we have buying, selling, buying, selling, buying, selling, this is efficient price action. But when we keep having huge candles, impulse, huge, that's inefficient price action. And by its very nature, price will seek to rebalance that inefficiency before continue going upwards if upwards is where it wants to go. And if we keep having impulses and inefficiency towards the downside like this, then price will rebalance that inefficiency before continuing to the downside. Because by its very nature, order flow is supposed to be buying and selling. So when we have buy, just like we have here, buy, we expect price to come down sooner or later and rebalance that buy with a sell and before continue going to the upside. So very quickly, my battery is low. Do you have any question? Let's get down to it. Thank you so much, Hamza. All right. Alama Habiba Kima, thank you so much. Never mind. Yeah. So, guys, do you have any questions? Have CC. I will break your head. I will break your head. Afsa, say your Zoom. That video. Afsa, say the Mokagama and Zaizo.
Kaya
Na haƙuri yayi. Ke ma ki haƙuri. ki ma ki haƙuri ba, wallahi ki haƙuri, ai ki zaki haƙuri, ni ba haƙurin da zai haƙuri me ba kawai dai subhanallah. Kin rasa class din missing sai yau, ku ci mutu yau.
Wallahi.
No. This is terrible. Wallahi kin yi mistake. Kin yi mistake. So, no problem. We'll talk. Yanzu dai screenshot wannan abun kada in manta. Yi screenshot page. System ina zai mutu sharp bi screenshot. Kin? Da kuma wannan. All right. Sylvia is not here today. Let's go back. Honestly, like guys, this is just messed up. Why would you miss? I catch it. This is what I hate. If you don't even understand price action, market structure, every single thing we will do is just nonsense. Just because he said he won't pick your call doesn't mean he won't guide you. Yeah, well, yeah, for sure. We will hold sessions once in a while. That's dedication speaking right there, boss. Please, someone should direct us from my phone. Yeah, for sure. We will hold sessions every once in a while. I can just text you guys, okay, tomorrow there'll be session. If anyone is ready, show up. So, but it won't be as regular as this. Whenever I feel free to just give you guys anything, I will do it. But it won't be as regular as this. I promise myself, yeah, for sure. 5 challenge, okay. But I'm doing manipulation only happens in the downtrend. No. Manipulation happens, it could go to the upside, it could go to the downside. Now, please, the manipulation, be very careful. Be very careful. Now, if this is ranging market structure during the Asian session, okay, if this is accumulation during the Asian session, the manipulation could happen to the upside. Instead of coming down, price would go up. Okay, there's context to it. There's so much you need to understand. It could be like this, Kuma. After arranging market structure, we could have this, and then we have this. It could be like this again. It could be like this. Okay, so depending, if it goes like this, this is a bearish day. If it goes like this is a bullish day. If it goes like this is a bearish day. If it goes like this is a bullish day. If it goes like this is a consolidation day. There's context to it, guys. There's context to it. So yeah. But today's session was in fact a very productive one. I am sure many of you learned so much, even the intermediaries here. When I put in the concept of liquidity to it, it will even make more sense. It will make more sense. When I introduce the concept of liquidity to it, make more sense. I understand everything in that slide. God bless you more knowledge. I'm so intuitive. I'm killed. Yeah, for sure. So if Mustafa, this is breakout. Now this is PUI. Price came. We expect price to respect this PUI and then come down. But if price comes to this PUI and then pierces through the PUI and continues, this is breakout. This is breakout. Alright? And here, this is fake out. If price comes and then goes like this, pierces through the PUI, and then comes down and continues. So this here is fake out. Because it made an impression that it wants to break out, but it didn't break out. So it's just English, fake out. It's just English. It's just your ability to train your eyes to see these things. Thank you so much. It's because I understand many things. Yeah, mashallah. I'm really grateful. And then Abdul Jalil, thank you so much. What is Abdul Jalil? I mean, Abdul Jalil. Okay, where's Muhammad Sani? Killed. All right. class monitor is asking for you guys. Where is Muhammad Sani? Many of them have left. Many of them have left. So guys, my battery is very low. We'll go even more and more advanced. As we forge ahead, we'll go even more advanced. This is just the beginning. This is just the beginning of market structure. But yeah, please note down these things. Well, these are the only, like, these are what I know. These are things I use. These are just, this is it. I'm not holding back anything. This is just it. What is in my head is what I'm teaching every single thing. Of course, this is the first model of market structure. When we start going advanced, it's definitely going to make even more sense. But please screenshot these things. Well, the concept of church that I just showed you now, many people don't know it. Many people don't know it. Many people don't understand. Oh. All right. So yeah. May God help us all. May God help us all. May God help us all. We get to where to put your stop loss, where to take profit, if possible, stop hunt. Yeah, guys, my battery would die off now. So if you have anything to say, please type it sharp. Yes. Or let me just switch off my system and call it a day. After key screenshot and Magana. So guys, if in the absence of no questions, should I exit? Should I exit in the absence of no questions? I think I should just exit the call.
So I have a question on NFP. Assalamu alaikum.
Alaikum salam. Perfect. Go ahead, sharp.